Welcome to today's show. So the game is back on. A little bit of relief rally going on with Ethereum and Bitcoin rising over the weekend and on Friday. We're going to talk about BMNR. They buy more today, more ETH on their balance sheet. MSTR comes out with their new offering, STRE. We're going to chat about that in Europe and continues to gobble up the market. And we've got a rally that looks like it's coming. And also, we're going to look at the companies, the large institutions that have been secretly buying BMNR. And what does that mean for the future of BMNR? And are we back in some kind of relief rally, bull run, or what's actually going on? Not tax advice, not financial advice, not legal advice. And do your own research. All right, I'm bringing you this show from Vancouver. We're going to hear a little word from Tom Lee right now on Ethereum.
Network value today's, maybe 400 billion or so, but global GDP is 90 trillion. Okay, the total size of global financial markets is, 200 trillion, maybe more.
Yeah.
It might even be 300 trillion. How much of that ends up on blockchains? The idea, according to Larry Fink, is to move 100% of this onto the blockchain. So we're talking trillions of dollars of assets moving onto layer one blockchains. That creates a lot of network value for the underlying chain that's essentially the base layer. So yeah,
Yeah, you mentioned Larry Fink multiple.
Fascinating, right? Larry Fink talking about moving 100% of the capital onto the blockchain. If you haven't watched my show before, I've been talking about this for a while. Wall Street is moving onto the blockchain. It is no secret. And they're building on Ethereum. They're building on other networks too. But think about the wealth transfer that will go onto the blockchain is going to be massive. So we're going to talk about that as well today. If you want more details on this, you can get my book down below, Money Game. You can also get my weekly trading strategy, where I average around 4 to 5% a week trading. And I'll show you how I do it all down below in a video in the book for free. All right. Since the market's been dropping, my goal has always been to pick up more shares when it's low. And that's why I trade. And I'm also a big believer in BMNR, MSTR, and Bitcoin. I hold all of those for full disclosure. And I continue to hold them because I believe that the future is bright. So we're going to get in and talk today about the government has officially, to somewhat agree to reopen. President Trump and the Senate have officially agreed. We will find out on Wednesday the official notice on this. We got to get the House of Representatives to come around, and we got to get this thing signed into law so that the government can reopen. And historically, when the government has reopened after shutdown, because this has been the longest government shutdown ever, when it reopens, stocks typically go up and there's a boom. So I'm excited to potentially see that. Bitcoin didn't waste a single second. It's pumping hard right now. It's at like 105.7. It cracked 106,400 last night. So Bitcoin's back in the game after we touched some really kind of low levels last week. And I got to admit, we were all sweating a little bit. Was it going to go below 99? Well, for now, it's holding strong. And that's a huge comeback, and it's happening fast. And traders rushed in to buy the dip, and it's working. Crypto markets are waking up again. So why this sudden pump? Because the government reopening, or partially, we should say, is reopening. It still has to go through the House, but liquidity is coming back. All right. In case you didn't watch my previous videos, the liquidity has not been pumping into the marketplace because when the government shut down, that means money is not flowing out of the accounts because people are not getting paid. And so there's not liquidity being pumped into the economy. And crypto is not going to be good unless there's liquidity in the economy. So we need the liquidity, and it's coming back. It's coming back hard now. When the shutdown ends, money starts flowing again through the system, and assets like Bitcoin and stocks usually rally, which is good news, right? So it's not just Bitcoin rallying. It's also Ethereum. Ethereum went up to like over 3,600. Right now, I think it's sitting at 3,570 right now, almost up 20% from last week's lows. Remember, it touched 3,000 last week, which was a bit of a spooker. Traders think new institutional money might start flowing into ETH ETFs again. And when Ethereum moves, altcoins usually follow. So this is what we call a relief rally. People were scared for weeks, and this comes in, and it's like, okay, it's not like officially the bull, or are we in a bull or are we going into a bear? But it's one of these things like, oh, God, relief, right? because it was just not fun. And good for you on sticking through it. I know it's just like heart-wrenching to sit through stuff like this, and now it's coming back up. So I hope for all you and your family, everything works out. Now, with the government back open, the fear's fading, a little optimism slowly returning, right? And just when everybody thought the market was done, Strategies acquired 487 Bitcoin for $49.9 million, which is big news. They've achieved a Bitcoin yield of 26.1% year to date. Yes, I know the stock is down. But Strategy is making good moves. And they just went into Europe with their product STRE. In fact, they increased their offering size. That just shows you the demand in the marketplace for it. They're up to $715 million US, 620 million euro in terms of the offering to STRE. It pays a 10% quarterly dividend. And this is just part of Strategy's game to actually just continue to offer up these credit instruments in the marketplace. If you're wondering what a credit instrument is, it's simple. Saylor says, we offer products like Strife and Strike and Stretch and STRE and all these different products. And you give us your money and we promise to pay you this 10% dividend. And we'll take your money and we'll buy Bitcoin. And that's the simplicity of how it works. And he is reinventing the credit marketplace because he is now backing his credit instruments and has been with Bitcoin, which is digital gold. And so they're literally changing the landscape of how things are done. We're going to hear from Saylor on this.
I'm describing all the ways you can capitalize. You capitalize your private fund, your private company, your public company, et cetera, your endowment. You can capitalize with digital capital. It's going to outperform the S&P by a factor of 3, right? That's very simple. But the other things that are paradigm shifts right now are digital credit. For 300 years, the Western world ran on gold-backed credit. All the sovereign debt from France, Germany, the UK, it was all gold-backed credit. The currency, the United States currency, $20 to an ounce. The US dollar was gold-backed credit. US bonds were gold-backed credit. So that's the status for 300 years in the Western world. Now we're moving to a world of digital gold-backed credit, digital credit. So what does that mean? If I know that Bitcoin's going up 30% a year, I can sell you a credit instrument that gives you 10% dividend yield. I can over-collateralize at 5 to 1. I can strip 95%. A lot of people aren't sure whether Bitcoin's going down 10% in the next year, but the likelihood is going down 90% in the next year statistically is 1/100th of that. I can strip 99% of the risk off the instrument by over-collateralizing it. I can hand you 10% of the yield. I can keep the other 20%. So you issued credit, which meets the need of a credit investor. And then you get the capital back. The credit is long duration. Like when we sell a credit instrument, we could sell $1 billion of a credit instrument. The creditors give us $1 billion. We give them back $100 million a year. We buy Bitcoin. It goes up 30%. We generate $300 million a year in operating income tax deferred. It compounds. We end up with $10 billion on the back end. You're looking 10 years out. We have $100 million of dividend obligation. We make $1 billion up front. We make $9 billion on the back end. We make $10 billion by selling. Think about this. You sell $1 billion of credit.
So what's he saying? Let's break it down into plain English, okay? The basic gist of what he's saying is his expectation is that Bitcoin's going to go up 30% a year for the next 20 years, 29%. So the way he looks at it is we can pay 10% out, meaning Strategy, on these preferred products that they have, which is Stretch and Strife and Stride and Strike. And we can pay out 10% because we know Bitcoin's going to go up 30%. That's his thesis. And so he's totally willing to do it. Like, I'll give you 10% because we're going to keep the 20%. And that's the plan. And the Strategy is not, in terms of its debt ratio, it's like something like a 9-to-1 of Bitcoin to its debt ratio. So it's got very little debt on the balance sheet. So what he's saying is Bitcoin could go down to like very, very, very low. and that would not be a problem for strategy. Now, the stockholders would hate it, but he's saying his long-term strategy is incredibly, incredibly solid. And that's basically the gist of what he's talking about. I've been studying strategy for a while, since 2020. Bought shares in strategy in early 2024 at $78. Bought my first shares actually in 2020, very, very low, and then sold them. But ultimately, I've been studying this company for a while. If you want more data on it to really understand the company, I break it down at a 5th grade level in my book. You can snag it down below. Totally free. I go into BMNR, I go into strategy, and I give you a real overview of these stocks, because I think it's important to understand the 2 most powerful stocks, I think, in the marketplace in terms of crypto are BMNR, which owns the most Ethereum, and strategy, which owns the most Bitcoin. So you really want to know about these. These companies are the future. BMNR now has 2.9% of the supply. They just bought 110,000 ETH today. So they have 2.9% of the supply of Ethereum. So these are the stocks to watch. They really are. And it's a game changer to see what's going on with how they're operating in the marketplace. Even though you see when bearish sentiment is in the marketplace right now, the MNAV of these stocks drop, and it's looking pitiful in terms of the stock price, but the future is very, very bright for strategy and BMNR. Okay. So Michael Saylor's company, I just talked about this, 49.9 million, but the bigger story is not just the fact that they own 641,000 Bitcoin worth over $65 billion, but the bigger story is that they just went into Europe. So there's a massive demand for these products. I mean, who would not want this? If you just look at the simplicity, who would not want to take a deal with a company that has the most Bitcoin on the planet, and they're like, hey, we're going to give you this credit instrument, promise to pay. You give us your money, we'll give you 10%. That's the basic deal that he's making with people. And we're backed by Bitcoin, so we're going to be around for the next several decades or 100 years. That's the deal. It's a smart deal, and through all the language and the terminology that's used, that's the basic of what's being done. So when you hear these new products coming out, they're just a new way to package up and offer products or credit instruments, which means we promise to pay you about 10%. Give us your money, we'll buy Bitcoin. That's what it is. It's that simple. Okay. So it's called preferred shares that he talks about with this preferred stock. So when you own MSTR, you're a common shareholder. When you buy these, you're a preferred shareholder, and it's more of a fixed payout rather than common shares, which are a lot more volatile, as we all know who own it. BMNR, if you take a look at BMNR and their holdings right now, 13.2 billion in total crypto. They've got 3,505,000 ETH at a price point of 3,639. They got 192 Bitcoin on the balance sheet, and they got some cash as well. So BitMine is an incredible stock to watch, also referred to as BMNR, $13.2 billion in total assets. And the story for this is, if you look at the last so many weeks, even despite the disaster that we were facing in October, if you look at 10.6, 10.13, 10.20, 10.27, if you look at all of this, you're basically looking at their ETH purchases over the last 5-6 weeks, and they continue to buy, and they continue to buy, and they continue to buy. So it's pretty wild to see what they're doing in the marketplace. Like, they just bought 110,000 more, and they keep buying every single week. So they're not stopping. Strategy is not stopping. Financial institutions are not stopping from moving onto the blockchain. And that's the big story of why ETH, because the financial institutions are moving there. They trust Ethereum. They're moving onto the blockchain. Some of them will move on to Solana, but you heard in the video that I just played, like, Larry Fink believes that 100% of the capital is going to go onto the blockchain. I mean, what's that going to do for companies like BitMine and companies like Ethereum? And then also, of course, Bitcoin is just the backbone of the entire crypto industry. What's it going to do for Bitcoin? What's it going to do for strategy? So it's literally the future is endlessly beautiful. The present is just extraordinarily painful, and it has been. And so that's what you get when you hold crypto. It's not a fun ride sometimes, but when it goes up, it's one hell of a ride. So that's their purchase last week, 110,000. Again, 2.9% of all Ethereum in existence. That's what BMNR owns, 2.9%, right? Halfway to their goal, more than halfway of their 5% total supply goal. So you're looking at strategy in BitMine. They've added millions more in Bitcoin and Ethereum this week, and the message is simple. They're not scared. They continue to buy. You zoom out and you look at the bigger picture. Bitcoin in June 2023 has been up 320%. I added more to my stack in November of 2023 when it was about $30,000. Bought my first Bitcoin at $3,000, for several Bitcoin at $3,000. Mined Bitcoin initially at a $2,000 to $3,000 price point. So I've been in this game for a little while, and this is just how it goes, and it's sometimes not fun, But yeah, I transferred money today. I'm going to be buying more BMNR this week. I'm going to see how we settle out in the next day or two. As you also know, I trade it, so I rarely will buy new BMNR because I trade it and I pick up shares at the bottom. So when it's at the bottom now and I trade it and I pick up more shares, that's essentially the same thing as buying more. But I'm actually going to take some fresh capital and buy some more BMNR this week. Okay. Bitcoin ETF launched back in June 2023. So we see that this has climbed up like crazy. Actually, the ETF did not launch back then, so that's incorrect data. But if you look at just Bitcoin in general, when you look back in 2023 and the ride that it's taken from about 30,000 per coin to 107,000, that's a pretty big bump. Okay. So massive growth happening there. If you look in 2022, Bitcoin was at $15,000. Now Bitcoin hit its all-time high of $126,000. So that's just the trajectory of how this thing can actually move. And we've seen it move in just 2.5, 3 days. This thing's moved up $7,000, about 7%. Mind you, we're not where we want to be, so it's all relative. But that's kind of the idea of how Bitcoin moves. All right. So even with the dips in fear, long-term investors never stop buying. We've got people that are buying in. You can see clearly in the ETF data here, over $47 billion flowed into the stock market ETFs just this week. That tells you liquidity is coming back. So the whole point of this is liquidity is coming back, right? With the government shutdown, liquidity was not coming back. In fact, liquidity was getting sucked out of the system. And now you have the government shutdown. No longer, hopefully, because it got passed in the Senate, it needs to go to the House and needs to go to Trump to sign. Okay. So that is good news. Let's talk a little bit about Ethereum whales here. Whales, the big players, have been loading up. Over 1.3 billion worth of ETH was scooped up recently, according to Look On Chain. And yes, BMNR is on that list as well. And check this out. I mean, who would have thought JP Morgan, the complete naysayer from years ago, poo-pooing Bitcoin, saying Bitcoin's a scam, Bitcoin's this, Bitcoin's that. And now you got JP Morgan has bought 1 million. They're disclosing now that they bought, right? 1,974,144 shares. So it's about $102 million worth of BMNR, right? The investment gives the largest U.S. bank a notable position in a public company accumulating Ethereum. Okay. So this is like if the tables haven't turned enough, like, come on, the one who was so anti-Bitcoin, anti-crypto is now not only owns BMNR, they're building on the blockchain right now. JP Morgan is building on the blockchain, guys. So this is a big shift, big shift, $100 million. And guess who else, right? Vanguard Group also, they purchased BMNR as well. So these things are being disclosed now of what's happening in terms of the ownership of larger players getting into the game and buying BMNR. So pretty interesting. Vanguard, the world's second largest asset manager, 2.86 million shares of BitMine, $148 million. Okay, we're talking about Wall Street giants now owning companies that hold Ethereum and Bitcoin. This is a big deal. Bitcoin is becoming an institutional asset. The buyers now aren't random traders. They're banks, funds, and even governments. As we know, about 12 nations are mining Bitcoin, okay? So we know we got a lot of headwinds. That's no joke, right? Like just because we had 3 days that are great does not mean we're out of the woods. The whole temporary government shutdown, rate cut talks slowing down, some old whales taking profits. I mean, that's what's been happening recently. But the bigger story is every time the market dips, new buyers step in, and those buyers now wear suits, not hoodies. So you got buyers stepping in now who are institutional buyers, institutional marketplace. Volatility will calm down over time because when the biggest institutions in the world start buying, they're not selling next week. And that's the thing. You've got these large institutions buying in, and they're going to be holding for the most part. So if you look at the big picture, the entire global asset map, you'll see how fast Bitcoin's catching up. It's catching up big time. In 2023, Bitcoin made up just 400 billion out of the world's $900 trillion in total assets. And now if you fast forward to 2025, about a $2 trillion market cap. If you look at the rest, you got real estate here, 370 trillion. You got bonds, 318 trillion. Also, by the way, what Saylor is going after with the fixed income marketplace, he's going after bonds, he's going after money market funds. So if strategy just gets a small portion of that supply of bonds and money market funds that move into his products, it's game over. And that's what's going to really continue to get strategy to thrive over the long term. Okay. So look at the rest of the world assets here. Bitcoin compound annual growth rate, about 120%. You got gold in there, about 35%. And you got other assets here. If you look at other assets here, you got like equities around 8%. You got art, cars, and collectibles 6%, real estate 7%. So real estate stocks and bonds and gold, they only grew about 6% per year over that time frame. Bitcoin, now we know that gold has done extremely well now, so I'm not discounting that at all. Gold's done extremely well recently. Okay, Bitcoin has been growing at 120% per year over that time frame. Nothing else even comes close. Let's break it down. Gold went from 12 trillion to 22 trillion. Real estate and stocks grew slowly, and bonds plus money barely moved. All right. So bonds and money, they're growing at like 3 to 4%. And this is just indicative of what's happening with the economy in terms of money printing that debases the dollar, debases money. Okay, that's why that chart is so powerful. It shows Bitcoin moving from being a tiny orange square to a serious global asset class. All right, I don't think that can be denied. Now, here's the cool part. Saylor expects Bitcoin to grow from 0.2% of global wealth to 7% of global wealth in 20 years. If you've heard Saylor talk about this before, he'll go on and talk about how in 20 years, Bitcoin could be a $20 million asset, $20 million per coin. And, he says that at about 29% growth rate per year, Bitcoin would hit close to about 20 million per coin. And that's how he gets that. So when he says that, people think those numbers are outlandish and crazy. But if you do the math, 30% a year in 2046, we'll have a $20 million Bitcoin. Okay. I'm not saying it's going to happen, but that's his prediction. That's his prophecy. Michael Saylor took Jesse Meyer's data, plugged it into his long-term model. He predicts that Bitcoin will hit 7% of global wealth, as I just said. So that means Bitcoin could rise from $2 trillion asset class to over 280 trillion if that happens, right? Which would be huge. Now that would be way, way, way into the future, but that's kind of how the game is going here. So Saylor thinks it would grow at about 30% per year, as I just said, but actually right now over the last several years, it's 120% right now, okay? Gold's doing great, up 35%. People are running from paper money. They're looking for real hard assets, hence gold and digital gold. Digital gold is a harder asset because it is finite and it is scarce. Gold is not. They mine 2 to 3% more gold every single year. The beautiful thing about Bitcoin is it's a protocol. It's a set of rules. And ultimately, that's what we like. People not changing the rules, humans not messing up the rules. With gold, you don't know how much gold's left on the planet. They're mining 2 to 3% more every year. When they mine more and more comes into supply, the more supply of something, the more something gets debased. So even gold is, you could say it's finite. We just don't know how much. It's definitely scarce, but we don't know how much gold is still left out there. Who knows? There could be vaults and vaults and vaults sitting in governments that we don't even know about. There could be gold mines. There's a new gold mine discovered in China for $82 billion. So there's no comparison between gold and Bitcoin. I'll continue to maintain that statement for the next several decades. There's no comparison. We're in a technological world. If it was not even more clear based on what's happening with AI and technology just running rampant, we're in a technological world, and the blockchain is technology, period. So gold's not going to compete with Bitcoin long term. Okay. So gold can't keep up with Bitcoin. And look at the weakest part of the charts. You got bonds and money are just trash. At the end of the day, bonds and money, like if you haven't read my book yet, go get it. Because I talk about the whole problem with inflation. And if you really look at inside the book, I talk about how you have to earn anywhere from 12 to 15% to keep your head above water. And the reason for that is, which is a very, very important point, is the fact that when you take into account taxes and inflation and asset inflation and also management fees, this is a real thing with management fees. You really got to take a look closely. If you have a 401k plan, if you have a fund manager, if you have a financial planner, mind you that like 77% of fund managers have not outperformed the S&P 500 in 2025. So if you have a fund manager, if you have a financial advisor, most of them are not outperforming the S&P 500. The good thing about the S&P 500 is you put it in there and there's very little fees. You put your money with a fund manager or financial planner, they typically charge you 1%. Run the math. If you run a 1% management fee over a 20 to 30 year period, over about 20 years, it'll cost you 15 to 20% of your wealth. Over 30 years, it could cost you up to 30% of your wealth. So people think, oh, 1% is no big deal. It's a very big deal when somebody's taking 1%. You know, if you put in $1 million and they're taking 1% a year, they're taking $10,000 a year. Make sense? So it's a very, very not a good thing unless your fund manager is just crushing it and outperforming the S&P 500. Again, none of this is tax advice or financial advice, but the S&P is 15, 16% this year. So most fund managers aren't outperforming that. So unless they're outperforming the S&P and they're doing like 22, 23%, I can't sit here and look and be like, why would I ever have a financial advisor? It makes no sense to me. Okay. So unless they're doing that, if they're good and they're outperforming the S&P, then there's a reason for it. Okay. All right. So all in the book, snag it. My trading videos down below too, if you want to see how I'm picking up shares at the bottom here. Okay. So that's the story on that. And we know that bonds and cash are trash. Okay. Inflation keeps eating away at your cash. Also, you really have to look at the money printing, and it's not stopping. Let's just be real with the situation. The money printing is not stopping. Every time they print money, it debases your dollars. Like if there was $100 in existence and they printed 10% more money, all of a sudden, like let's say you had 10% of all the money in existence, and all the money in existence was $100, and you had 10%, you would have $10. But then every year they print more money. It's been going on for the last 100 years, 6.5% more per year. Okay. So let's say they printed 10% more money. Well, now the supply went up and you still own your same slice of the money pie. And so as the supply goes up, your slice of the money pie buys less and it's worth less. That's debasement. That doesn't take into account CPI, consumer price index, which they claim on the news is 3% a year. And the CPI actually is, but real inflation is not 3%. So all of this I cover in my book, but it's so important to know because like houses go up by 5% a year. Your mortgage on your house is 7% a year in terms of if you're financing, you have property taxes, you have all these things, college tuition. I was looking at the other day, I was just curious, what does it cost to go to Harvard? It's $82,000 a year to go to Harvard. So they put all these things in the CPI, but a very small percentage of the CPI is weighted in terms of college tuition. And it does include room and board and fees and food and all that different stuff that comes up. So the real drag on your money is not 3% CPI. It's so far from even being close to the truth. Like you have to earn at least 12% to get ahead. Okay. So that's the story. And that's why I'm in crypto. That's why I'm in Bitcoin, not only because I believe in the set of rules and protocols that back it, but because the traditional financial system is to me is just not good. Okay. Government prints more money, your dollars lose value. We just talked about this. And if you look at President Trump, look at what's happening now. Now, this is good for Bitcoin because last time this happened, it was very, very good for Bitcoin. President Trump just announced he's planning to send Americans a $2,000 tariff rebate check, okay? Which basically says that we're going to get $2,000 back as Americans as a rebate because of tariff collections, all right? Tariff revenue. So if you bought Bitcoin back in 2020 with your $1,200 stimulus check, you'd have $18,000 worth of Bitcoin right now. Okay. So people are going to get their stimulus check and they're going to do stuff with it. They're going to spend it. They're going to go out. They're going to do whatever they do. And some will put money into risk on assets like Bitcoin. So back in 2020, when everyone got that $1,200 COVID stimulus check, Bitcoin was traded around $6,000. And if you had used that check to buy Bitcoin today, you'd have $18,000 worth of Bitcoin. All right. I was buying lots of Bitcoin back in 2020 and 2021. All right. That same round of stimulus kicked off the 2021 bull run. And who knows, could it kick off the next leg of what has been or not a been or kind of been a bull run? Let's see what happens if we have another run when the stimulus checks come out. Now, mind you, there's good news coming out in terms of the indicators. I think the Fed is going to have to cut interest rates again in December. The job market is crap. And it's just, I think they're going to cut interest rates again. Okay. So $2,000 checks, they're coming from tariff revenue, as I just said. More cash in people's hands. History tells us where that money tends to go. Bitcoin and crypto. Again, Bitcoin's pumping. It's at 106,000 right now. And this is from Max Crypto. He points out that Bitcoin surged 96% and 157% after past US government shutdowns. So let's see what happens now. Let's see. I know we've been getting like all this news and it's like something's going to happen. And then it's been such a letdown. So I remain optimistic for the future, but I don't want to, pump all this news and be like, hey, this is what's going to happen. We'll see what happens. There's good indicators. Let's see if the indicators turn into reality. Okay. So, I'm not going to get into this one. We're just going to pump over this, but that's the basic on what I wanted to share with you today. I think there's some really good things happening in the marketplace. I think in summary, the things that we covered today are number one, BMNR keeps on buying, which is huge. So we're looking at 2.9% of the Ethereum supply. That's a big deal. Strategy continues to buy, and they move into the European marketplace with STRE, their new product. The demand was so high, they doubled down on their offering, $715 million. 710 million, 715, one of the two. 715 million, and I think 620 million euro going into the European marketplace. So it just shows that their strategy for what they're doing with credit back to instruments with Strike and Stride and Strife is just a golden strategy, and there's demand across continents with this thing. So they're going to continue to buy more Bitcoin. They're not going to stop. And you got the two leaders in the marketplace, BMNR and MSTR, right? So that's news. Liquidity will come back into the marketplace now with the government shutdown. That was not possible. With the government reopened, that could be possible again. Liquidity will start rushing in. That's good for crypto and risk on assets. So we will see what happens with that. And then BMNR, I think, is the story of the day. If you just take a look at what Tom Lee's company is doing, their accumulation of Ethereum is the fastest of any crypto treasury company in history. Strategy accumulated 3% plus of the supply of Bitcoin in 5 years. BMNR has done it in less than 5 months, but with obviously Ethereum, not Bitcoin. So that's the story of the day. We also got JP Morgan buying BMNR, who was a total skeptic. We've got Vanguard just announced that they had bought BMNR, so they're disclosing these things now. And so it's a big deal of what's happening in the marketplace right now. So we'll see what happens over the next month, 2 months. Could we have a strong end to the year? That would be super nice if we did. And hope all of this serves you. If you want to get my book, it's down below. You subscribe to the channel, like down below, leave a comment if you want. Also, I have a trading strategy. I've been trading BMNR stock for the last 17 weeks. I've been profitable 16 out of 17 weeks. But today I had a little bit of a doozy. So we'll see if I'm profitable this week. Took a little bit of a dump on one of my trades. But I do about 4% to 5% per week on average trading. And so if you want to learn the strategy, you can snag it down below. There's a video there that's for free as well. And there's a book that I spent a lot of time on that goes into BMNR. It goes into MSTR. It goes into traditional finance because I grew up in the traditional finance world, 21 years old, started out in that world. So I understand all the different products from 401k plans to mutual funds to stocks to insurance policies. And so I've spent my life comparing the two of like, wow, traditional finance versus the new world of finance, which is digital finance. There is no comparison. And then it gives you the history of money. It's nice to read like where did money go off the rails? I personally believe that if you want to understand a solution fully, you also have to understand where the problem originated from. And I think if you don't understand the history of money and how we got this way, it's really hard to accept a solution full boat. There's a reason why I'm 100% into strategy and Bitcoin and BMNR, because I understand the problem of where this originated with our money system. If you want to know how the Fed really works, I break it down in the book. It's really good to see how the Fed works because everything else after the Fed is kind of a shadow of the Fed. It's like a lesser form of the Fed in terms of how money printing goes. And I was explaining this last night with my girlfriend at dinner and her kid. And we're sitting there talking. I said, you really just need to understand how these banks operate and how the Fed operates. And when the banks are giving you loans, they're typing money on a screen. So you go into the bank, you're like, I need $100,000 loan. They type it on a screen. And when they type it on a screen, then they loan that money out to you. And that's how banks make money, through interest. And so when you really look at the money that's going out into the economy, that comes from the banks. And so it's coming out in the form of car loans, mortgages, and high interest credit card. So when you look at the loans, you're talking about 5% loans, 7% loans, 10% loans, 20, 30% with credit card. So what happens is the banks, they loan money out, but they want to get those loans off their balance sheet. So what they do is they'll bundle up the loans. So let's say there's thousands and thousands of people that have car loans, hundreds of thousands of people that have car loans, and they have mortgages and they have credit card debt. They'll take your mortgage loan, they'll take your car loan, and they'll bundle it up. And so they bundle up billions of dollars worth, and then they'll sell it to investors. And so they'll then take your payments that you're paying to the bank, and then they'll pay those off to investors. And in return, those investors will give them a lump sum of money. And so what they've done is they've gotten their loan off the balance sheet. So it's the loan's no longer there on their books. And so now they can actually make new loans. So they're incentivized to get their loans off the books by selling them to investors, and then they get a windfall of cash in back for that, and then they'll go out and they'll make more loans. And they keep repeating this process over and over again. And that's basically how your banking system works in terms of the loan process. So to understand this, I think is really important, because one would then duplicate and get that we are in a society that is based on a money printer and numbers on the screen, and people who question like digital finance, how is crypto, how is Bitcoin real money? How are you sitting in a traditional financial world in any government that you live in? You know, go to France, go to the UK, and you'll see the same thing. They're printing money. So that's what the word fiat means. You see, fiat means decree, which means statement. So your money that you hold, which is on the screen, is backed by the good word of your government. That's it. That's what decree means, statement, the good statement, the good word of your government. So people don't mostly understand that. Your average person walking around, you may understand this, they don't get it. And so when you have to have a new world of finance for us to actually thrive as citizens of our countries, the government can keep printing because they pass on the problem to you. And that's how it goes. So it's not a problem for them if they keep refinancing the debt and refinancing the debt and refinancing the debt. We live on a debt, basically monetary system, $37 trillion in debt here in the US. But that's why, you know, and when you look at it, and go read my book, it just breaks down how the Fed operates. It'll blow your mind, man. And so everything's done. When you look at how these things are done, they're done in loops. And, you know, I think those loops, like, why loop everything and show people loops? Like, loops would confuse somebody. Why not just show people money goes from A to B, but it's done in a loop, and go watch how it's done. Okay. And then the terminology I break down in the book. I don't give you any big words in the book that I wrote, because I wanted to make money something that everybody could understand. And all these big words that are used, like treasury bonds, like, you know, like it might not be a big word to you, but go ask your friend what a treasury bond is. Go ask them. You know, they don't know. Go ask your spouse what a treasury bond is. They don't know. It's basically the government that says, yo, daddy, I need a loan. That's all it is. It's a loan. Why not just call it a loan? Why not say that the US government gets its loan from the private banks? Why not just call it that? It would be too simple. People would go, really? They're getting a loan every time this happens? They're getting a loan? Yeah, they're getting a loan. You know, so if you really break down the simplicity and you see the truth of the problem of traditional finance, you'll just get it and go, wow, traditional finance is really, really like irrational, illogical, and it's not designed to serve the customer. It's not, because, and that's why what Michael Saylor is doing is so brilliant, because his products are designed to serve the customer. And he can, because he's backing his credit instruments like Strike and Strife with a hard asset like Bitcoin that can't be endlessly printed, because there's only 21 million. So he has a hard asset that will go up over time. And that's why like instruments from that company are powerful, because they're coming from an organization like that that's backed by Bitcoin. But when you look at the US government or governments around the world, what is their dollar backed by? What is a euro backed by? Nothing. So people say, what is Bitcoin backed by? A set of rules and protocols that says that it's finite and scarce. What's the dollar backed by? A set of rules and protocols made up by a government that can change it anytime they want. It's backed by what? Endless printing of money that's not scarce, that's not finite, and literally has the value of the good word of your government. Okay, so you get more and more people to go into agreement with the new world of money. And that's what it is. Like money is agreement, right? There's agreement all over the world that this is worth something. So you get more and more people. This is one of the reasons why I do the YouTube show, to spread the word, to disseminate, to tell people the new world of money is the answer, or new world backed by Bitcoin. Because then it can be worth something. And then the returns can be high enough to where, you know, the American citizen or citizens of countries don't become, it's not parasitic, right? Where you have to get pieced off with the lowest rate of return that you're paid on things. But then when you want to borrow money, you get the highest return, you get the highest rates, right? Like when I want to earn something, great. Give me take my money and I put it in a bank and I'm gonna get it less than 1%, or I give it to you in bonds and I'm gonna get 4 or 5%. Like how is that equitable when the financing on your house is a minimum of 7%? Go look at the last several decades of financing on your property. It's more than 7% if you average it all out. So when you look at these instruments of like you're paying out way more than you're getting back. And last time I checked in Mathematics 101, if you're paying out more than you're getting back, that's called being insolvent. That's called being broke. Okay. So that's the traditional financial system. So that's why I do these shows, because I'm passionate about the new world of finance. And yes, anything that's new has volatility. It's going to go up and down because it's a new asset. Just because something's volatile doesn't mean that it's not good. In fact, the opposite. The fact that something's volatile gives you that opportunity for upward gains. None of this is tax advice or financial advice, but it gives you that opportunity to win. In traditional finance, it's mass because it looks like you're winning when you're earning, you know, the S&P 500 is up 15% this year. But when you factor in all the drag on your money, you're not winning. And so the sane choice is for one to actually get ahead. It's not traditional finance, it's digital finance. Okay. And then of course you have things that are coming out like the stocks, AI stocks. That's all beautiful because that's innovative technology. Innovative technology with AI, it's not going anywhere, but it's another form of technology. And take a look at, you have these two sectors. You have AI, it's a technological world. You have crypto, it's a technological world, right? Blockchain is a technology more than anything. That's why do you think all of Wall Street's going there? Because it is a technology. They're building on top of a superior technology versus the banking system, which is an inferior technology because it's slow. Settlements take too long. I mean, tomorrow, what do we get? We have Veterans Day tomorrow. Is it Veterans Day? No, it's not Veterans Day. I'm in Canada. I think it's Veterans Day here. But you have all these holidays that are taking place, and so when you have holidays, they shut down. They run 8, 9, 10 hours a day. Like you can't compete with the blockchain, which is far superior because of speed, because of security, because like it's just a better, faster, cheaper, more able, and more technologically advanced system. So when Larry Fink says, like I showed in the beginning of the video, like he thinks 100% of the capital is going to go to the blockchain, it has to go there because money is going to flow to the fastest, the most efficient, the most secure platform. And that's the blockchain. Okay. So that's it. That's what's happening. That's where the future is going. 100%. That's where the future is going. Doesn't mean you're not going to have it incredibly volatile, just like, you know, holding BMNR and holding MSTR is like going, 500,000 miles per hour in a plane and holding onto your face. You know what I'm saying? When you're going fast, you're loving the ride and it's great. But when the headwinds come in at 500,000 miles per hour and it's blowing back and like your face gets blown off. Okay. I hold the stocks because I believe in what they're doing and I understand what the companies are doing. And I believe it's the future. That's why I hold it. So hopefully this has been helpful for you. If you don't yet have a solid understanding of MSTR and BMNR, go learn about Bitcoin and Ethereum first, right? Go get that data. That's why I wrote my book down below. It has all the data and it takes you on a gradient through traditional finance. It then takes you through the history of money and then talks about what the Fed is and then shows you why 10 to 12% rates of return are not good. Then it explains Bitcoin in detail, then explains Ethereum, then explains MSTR, and then explains BMNR, and then explains the future. All right. But one should learn about this stuff on a gradient. Like imagine if we went to friends of ours who knew nothing about BMNR. Hey, BMNR is cranking it today. It's up, 5, 6, 7, 8% today. And they're like, BM who? BM what? What the hell are you talking about? So like things that are introduced out gradient don't work. And that's just like out gradient means like you want to bring your friend to grade 12 when he's at grade 0. That stuff doesn't work. If you ever want to go to your family, you're like, why didn't they understand Bitcoin? Like, why is everybody shooting me down? It's not that they're shooting down Bitcoin. If you explain something that's over their head or out of their reality, you can't go to somebody who's been sitting in bonds for the last decade at 5 and 6% and introduce Bitcoin. You first have to introduce the problem. This is just classic one-on-one sales, but you can't go in and be like, Bitcoin's the greatest thing in the world. You should sell all your bonds. You should get into Bitcoin. One, that would be financial advice. You can't do that. But number two, somebody's not going to accept something that's not real to them. Make sense? So it has to make it real to them. So the way you get the older generation to learn about Bitcoin and be open to Bitcoin, I know this because I did this with my stepfather and he's now in Bitcoin. The way you get them open to it is you have to educate them on the problem, right? And you have to show them the problem. And then when they see the problem and they actually get the problem with traditional finance, then they will look for a solution. But you have a small percentage of the marketplace that's actually really is like Bitcoin aware, you know? And so when you start talking about Bitcoin, they jump in, they're like, yes, Bitcoin, I'm going to buy the dip. But the great majority of the population is not Bitcoin or solution aware. They heard the name, but you might as well be talking about Mars. It's as unfamiliar as Mars to most of the population. You go, what is Bitcoin? They go, oh, it's like that coiny thing on the internet. It's fake money. So it's as unfamiliar as Mars. Most people have not been to Mars, right? So you're looking at a society where people have heard of Mars. They haven't been there. You're looking at a society like Bitcoin. People have heard of Bitcoin, but the great majority of the population has not been there in any degree that is any significant value. They may have $100 or $500 or put a little bit of money in there, but that doesn't mean they have an understanding of the solution. So the way you get it out to the marketplace is you continue to highlight the problem of here's what traditional finance is. And you walk, if you want to introduce this to your family, you walk them through step by step. Hey, did you know that with management fees of 1%, did you know that this is how much it could wipe out your wealth? And you explain it to them. Why? I literally just did this with a family member the other day. Swear, as sure as I'm sitting here, was on the phone with their financial advisor, saw the 1% management fee, got on the phone with them afterwards. Hey, I have some concerns about this. Here's why. Let me show you why. Okay. This was happening all over the marketplace. So you have to sit there and show people what management fees do to their portfolio. You have to sit there with your family and talk to them and understand inflation and be like, inflation is really not 3%. Here's why. All right. You have to explain to them what asset inflation is. It's a real thing. Houses going up. You have to explain all these things when you want to get a family member who you love and care about into the real world of finance, which is not traditional finance, which is not Wall Street anymore. Wall Street's going to the blockchain. They're always going to control the money and have the money, but they're going onto the blockchain. That's the real world of finance. It's the new rails. It's the new system. So if you want a family member to understand it, then cite things they're familiar with. Talk to them about inflation. Talk to them about management fees. Talk to them about taxes. Talk to them about the real drag on their money. Talk to them about money printing and walk them through it. And once you've shared the problem with them, they're going to go, wow, I didn't know that. I didn't know that. I didn't know that. Do you know how many of your family members might not know that that we're still not backed by gold, that the dollar's not backed by gold? Go do a test and go out in the marketplace and ask some of your friends, be like, hey, do you think that the dollar's backed by gold? Some people will say yes. So we're talking about this level of financial understanding in the marketplace. And so go help people and go share with them. Here's the problem. And explain it to them and walk them through it and sit at the table with family member on a napkin and draw it out and make sure nothing's above a 5th grade language. If you don't understand a certain term, don't use it. You know, when I don't sit there and start telling people about the blockchain over dinner, right? If I'm going to explain it to them, I explain it very, very simple. They're like, what is that blockchain thing? I'm like, okay, block. It's like a ledger, right? You know, when you go into your bank and you pull up your statement, that's a ledger. There's numbers on it, right? So it's block. That's a ledger, right? You feel numbers on the thing. Chain, right? A chain, right? Block. Your ledger, a chain of ledgers. That's what it is. The difference between your banking ledger and this ledger is this one's more secure. They can change your bank stuff all the time. You remember when they started fudging stuff and fudging the books, right? When Goldman Sachs did it and this come, oh, yeah, right? And they'll start to get it. That's all it is, okay? It's a chain, ledger, numbers go on there. When people buy Bitcoin, it goes on there. Just like when you put money in a bank, it goes on there. You explain it in like 3rd grade, man. And if you do that, you'll get your family member to go, wow, maybe there's something to this. Holy cow. All right. So I think perhaps one of the greatest failures perhaps of any industry is, and I know something about this. Listen, I've sold 60,000 products around the world in terms of helping businesses and sales and marketing and other things. And the one thing that I've learned in helping experts, because we help experts communicate their knowledge and expertise into the marketplace, and we show them how to sell it in the marketplace. And one of the biggest failures across industries is that experts, they use jargon that only they understand and their peers understand. And so they're walking around in the marketplace trying to sell their health product or sell their chiropractic thing or sell their money thing or sell this thing or sell that thing. And they're using terminology that the world doesn't understand. And so if you're truly an expert, you can break stuff down at a 5th grade level and you can sound simple. And partially why the financial industry has failed is misunderstood words. And you have advisors who are out there offering products in the marketplace that they don't fully understand. And people just buy in and they go into agreement with things. Yeah, it sounds like a good product to sell. Okay, yeah, okay, commission on that and this, and they're going to earn 10 or 12% over the time. Yeah, okay, great. People go into agreement with things that they don't fully understand, and you can't do that. Can't do that. It creates a rough world. All right. So part of the financial industry, if you want to watch somebody leave your kitchen table faster than you can say Bitcoin, start giving them words they don't understand. They will literally leave that table in seconds. They will change the conversation in seconds, and they will get antagonistic towards you. They will. You start giving them words they don't understand. They're going to have reactions to that, because when people don't understand things, they get confused. When they don't get confused, what do? When they get confused, what do? Right? Go look at a person who gets confused, and a person who's confused will grab onto false data, by the way, because it's a safer solution. Like they'll just grab onto the false data there because they're confused. They'll grab anything that's going to give them a stable form of data. So if you want to spread it out in the marketplace, use words, understand Bitcoin, use it in simple terminology, understand Ethereum, use it in simple terminology, educate your family on this, and educate them on the problem they're facing right now, and then introduce the solution. And that's how it rolls. Okay. Hope it serves you all. If you want to pass on my book to a friend, go pass on my book. It's free. I wrote this book in a 5th grade language, but it's super good. And you can pass it on if you want to get my trading strategy. I created a whole video on how I trade on a daily basis and how I've been doing extremely well trading BMNR, extremely well. Okay. And I do lose from time to time, lose from time to time. You take your hits, but last 16 out of 17 weeks, I've been profitable. This week, I started off rough, in full disclosure. So we'll see. Will I go 17 out of 18 weeks profitable, or will I have a down week? We'll find out soon. 4 days left. All right. Hope you guys have a great rest of the day and stay strong. And I hope that this becomes a great bull run and turns into one rather than what is this right now? It's kind of a sit and watch run right now. All right. Stay well. You guys are amazing. Thanks for being here. See you soon.